Welcome to the Explainer. So, the final week of 2025, it really looked like a total snooze fest for the markets, didn't it? But, while it seemed like most traders were on holiday, was money actually still moving? Let's dig into the numbers and see what was really going on. Right, so with the holidays in full swing, you'd think the markets would just take a vacation too. But is that the whole story? We're going to compare traditional stocks with the 24/7 world of crypto to see if we can uncover the truth. Okay, let's start by zooming out to the big picture. For the major stock indices, this shortened holiday week was basically defined by one thing: pretty much nothing happening. It was a classic holiday snooze. I mean, just take a look at the S&P 500. It finished the week almost exactly where it started, closing at 6,929 and 94 cents. The market was essentially just hovering in place, just a stone's throw from its recent record highs. Seriously, no drama to see here at all. And it's a really similar story for the tech-heavy Nasdaq. While this week was super quiet, it's that bigger picture that really matters. The index is still holding on to a massive 17.88% gain for the year, which just goes to show that one slow week doesn't erase a whole year of really strong performance. And if we look across the pond, yep, European markets were also in full-on holiday mode. But just like the Nasdaq, the Euro Stoxx 50 has had a fantastic year, boasting an impressive 18% gain year over year. So the key takeaway here is pretty simple. Traders might have been more focused on eggnog than on equities, but this quiet week was just a calm little postscript to what was a fantastic year for stocks on both sides of the Atlantic. But what about the market that never sleeps? Let's switch gears and dive into the world of crypto. In a space that literally trades 24/7, did we see more action, or was that holiday calm kind of contagious? Well, looking at the top coins by market cap, we see a whole lot of green, but just barely. There's a ton of stability here, with most of these assets posting only really small single-digit gains over the past week. And the story for the market leader, Bitcoin, pretty much followed the exact same pattern. It started the week on a high, saw a little dip down to around 87,200 by Friday, and then it just bounced right back over the weekend. The net result of all that? A completely flat week. But hey, even in a quiet market, there are always some standouts. So now let's zero in on the assets that actually showed some life and managed to outperform the rest of the pack this week. Okay, this is where things get interesting. When the whole market is just moving sideways, the real story isn't about these massive price swings. It's all about finding the assets that manage to pull ahead, even if it's just by a little. And a few digital assets definitely bucked that trend. And the winner is pretty clear. While Bitcoin was totally flat, Cardano, or ADA, posted a nearly 4% gain. Now, that might not sound huge, but in a week this quiet, that kind of performance makes it the undisputed MVP among top-tier crypto assets. So what's next? This holiday calm, well, it's not going to last forever. Let's look ahead to 3 key economic events coming up this week that could absolutely shake things up. So go ahead and mark your calendars. On Tuesday, we're getting the Fed's latest meeting minutes. Then on Wednesday, we get a fresh read on the U.S. labor market with jobless claims. And on Friday, we see brand new data on the health of the U.S. manufacturing sector. So why do these 3 things matter so much? Well, the Fed minutes could give us some major clues about future interest rate cuts. Jobless claims will show if the labor market is cooling off too quickly, and that manufacturing data will tell us if that crucial sector is losing steam. Altogether, these reports are really going to set the tone for January. And that brings us to our final thought. As we close out 2025, was this sleepy holiday week just a sign of market stability, a well-deserved rest after a really strong year? Or is it simply the quiet inhale before the market makes its next big move in 2026? We'll be watching.